Hey guys, in this lesson I'm going to show you how to plot your stops and targets onto the chart whenever you detect a entry signal. So we'll be covering this concept in multiple lessons throughout the course, but I thought it would be helpful to have a standalone lesson that you guys can refer to whenever you are trying to add stops and targets to any scripts you're working on. So I'm going to show you two examples here. The first example is simply going to plot a stop loss and a target above and below entry signals. The second version is the one you see on my chart right now. This is going to draw your stops and targets across the chart until one of them is hit. So slight difference there. One will show you the stops and targets for every signal, just on the entry signal. And the second version of the script will draw across the chart for so long as you're involved in that trade. And then I may add a bonus section at the end of this lesson that shows you how to do the same thing for strategy scripts. We haven't covered strategies yet in the course, but the concept is basically the same. So let's get coding. Now, the point of today's lesson is not to show you how to detect entry signals and how to combine market filters. We'll cover that in other lessons. And that's why I've started this script off with a bunch of code already here. I'll explain quickly what we're doing. We're getting my Zen library. We're importing that into our script. That gives us access to my candlestick pattern detection code just to make things a little bit quicker. For today's lesson, we're detecting hammers and stars, so pin bar candles. We're getting some user input. The first input is an ATR multiplier, so it's set to 1 by default, which means we will have a 1 ATR stop loss below swing lows and above swing highs. And we also have a risk reward profile input, which is also 1 by default, which means our risk reward profile will be 1 to 1 by default. So if we have a 10 pip stop loss from our entry, then we will have a 10 pip target distance, but we can change that in the settings. Next, we detect our candlestick patterns. In your script, when you're building a script, this is where you would detect your own candlestick patterns and combine them with various conditions, market conditions and filters, indicator values, etc. For today, we're keeping it very simple. We're just detecting two types of patterns, hammers and stars, bullish, bearish. And for our filter, we're just going to use a simple EMA filter. So if price action is trading above the EMA, the 50-period EMA by default, then we will be looking for long trades or hammer candles. If we are below the moving average, we'll be looking for shooting star candles to go short. Then we also get our ATR value. This is used for calculating our stop losses. And let's get started building out our stop loss and target code. So the first thing I need to do before we continue is create one new variable here called, we can call this anything. I'm going to call it ready to trade. And this is going to be a Boolean value that is true only when the conditions are ready to start trading. In this case, we want to check, is the EMA not NA? Or in other words, has the EMA function begun calculating its value? Basically, it will not have a value until we already have 50 bars on our chart. So if I go to the very first bar on my chart here, this is the last available bar. We would need at least 50 bars to print before a 50-period moving average would begin drawing onto my chart. We also need to check and not NA, and then pass in our ATR value. And this is a 14-period ATR value. So we need at least 14 bars drawing on our chart in order to begin calculating accurately the ATR value over that look back period. If we try to draw stops and targets when the ATR is NA, so let's say we got a entry signal right here on the 4th bar or 5th bar on our chart. If this candle meets our entry pattern criteria for our candlestick, but our indicator values are not calculating yet, they're NA, what can happen is we might enter long on this bar, but when we try to calculate our stop loss, because the ATR has not been calculated yet, we won't have a stop loss, and so we'll just enter long on a trade with no stop and no target, and we'll basically be stuck in a trade that never closes as far as our script is concerned. So to prevent that from happening, we need to check, is the EMA not NA? To do that, we use the NA function. You cannot say in PineScript, is the EMA equal to NA or not equal to NA? If you use this approach to checking a value to see if it's NA, you will run into all kinds of weird problems because PineScript does not like it when you compare a value to NA. The correct way to compare a value to NA or null, remember NA just means it's set to nothing. It is an empty value. It's not a data type. It's not a number. It's not text. It's nothing. If we want to check if something is nothing, we need to use the NA function, which will test the value. If you read that little pop-up, it says test value if it's a NaN type or nothing type. So that's what we do here. We check, are our indicator values drawing onto the chart? If so, then we are ready to start taking trades. And that's what we do next. So the next thing we do is we combine our patterns and filters. So I'm going to create two new variables here, one called valid long and one called valid short. Valid long will only be true if we have all of the conditions needed to go long, and valid short will be the same for short trades. So for a valid long trade, we need to make sure that we are ready to trade. So this check passes, and we have a hammer candle, and the current closing price is greater than our moving average. For short trades, it's the same idea. Ready, we need to be ready to trade. So our indicators need to be plotting. We need to have a star candle pattern, and the close needs to be below the moving average. And those are our simple conditions for today's lesson. Now, with a bit of tweaking, this can actually be a profitable strategy. I've traded this type of system before, especially on the daily chart on certain markets. But for today's lesson, we're going to keep things really simple, and this will do. So now that we have detected when we need to go long or short, let's add some plot code so that we can actually see what's going on. So we can say draw signals and, not signacs, signals and data. And we can say plot our EMA value, and I'll just give this a title of EMA. And then we can use the plot shape function. And in fact, I'll just copy this code over to save time. But we're just going to use the plot shape function like we always do, or like I always do, to signify when we have a trading setup. So if I save my code now, I can get rid of this plot NA. The script should compile. And now we're getting hammer candles and shooting star candles being detected above and below this 50 EMA. So that's our signal setup detection done. Now we need to calculate our stops and targets and draw that onto the chart. So first things first, let's calculate our long stops and targets. To do that, I'm going to need three different variables here. We need the long stop price, the long stop distance in pips or points or satoshis, sats if you're a crypto trader. Then we need the long target price. So our stop and our target is going to be a price value. Our long stop distance is going to be a pip or point based value. So for our long stop, that's really simple. All we need to do is, because we're trading hammers and stars, I'm just going to put the stop loss below and above the entry setup candle. You could add code here to look for swing lows. So you could use the TA.lowest low over a look back period. So let's say 10 bars. And you could use this as your stop loss anchor if you want to. For today's lesson, we're just going to go with the low of the entry candle, the signal candle. And we need to subtract from that low the ATR value, the current ATR, multiplied by our ATR multiplier input setting. So by default, this will just be 1. So 1 ATR will be subtracted from our low price, and that is our stop loss price. You could also make this a fixed pip target. To do that, instead of multiplying the ATR, you would need to multiply the siminfo.minimum tick value by 10, and then multiply that by how many pips you want your stop loss to be. At least for Forex, that's how it works. Maybe with crypto, depending on the market, you might need to tweak that formula a little bit. But for today's lesson, we're going to stick with a dynamic stop loss that adjusts based on market volatility. So we're not using a fixed stop loss, we're using a dynamic stop loss that will expand based on how big the candles have been recently. So to do that, we're already doing that here. We're getting our long stop price. Our long stop distance is required in order to calculate where to put our target. So to calculate the long stop distance, we need to subtract the long stop price from our entry price. So in this case, our entry price is going to be the closing price of the candle, the setup candle. Let me zoom in a bit here, show you a bit more of what I mean visually. So let's focus on this bar here. This is our entry price, the closing price. We need to subtract our stop loss price from that entry price in order to get how far the stop loss is in pips or points. So here I just say close minus long stop. That gives us our long stop distance. Now to get our long target price, we need to add the long stop distance to our entry price. In this case, the closing price is going to be our entry. We need to add our long stop distance in points to that closing price, multiplied by our risk reward profile. So before we move on, let's also plot our stops and targets, and I can show you exactly what this looks like on the charts. So here I'll just say draw stops and targets. We'll use a regular plot. For this, I'll say, do we have a valid long trade? Question mark. If so, then draw our long stop. Otherwise, draw nothing. Draw NA. So if we do not have a signal on our chart, do not draw a stop loss. Only draw the stop loss when we have a signal. And then we'll give this a style of plot.style line break and a color of color.red. And we'll title this trade stop. I can copy this now, paste it down there, change this to long target, and this to green, and this to trade target. Now, when I save my code, when we have a valid long signal detected, we will be drawing our long stop and our long target price values onto the chart above and below the entry candle. So watch what happens when I click save. If I minimize my editor and bring this down a bit, you can now see these green and red lines drawing above and below our long trades. And if you were to add the ATR value onto your chart and measure from the low down to your stop loss, that value will be exactly 1 ATR from the low. And our target, if I throw on my position tool, should be 1 to 1. So if I bring my stop loss down to the red line and my target up to the green line, it's not quite 100% accurate because my entry is not quite accurate. If I hover over this bar and get the closing price, which is 61532.17, so 61532.17, click OK, bring my stop and target to the green and red lines, and there we have it, a 1-to-1 risk reward profile based on a 1 ATR stop loss. So that's really it. All we have to do now is copy this code for short trades. So if I copy this block of code, paste it down here and change this to short, and all of these to short, copy that down there and over there. Now we need to flip some of our operators. So for a short stop, the stop loss will be above the high. So we need to add our ATR multiplied by our multiplier to the high price of the shooting star candle. And our stop loss distance will be our short stop minus the closing price, because our short stop will be above our entry price. That means that to get a positive number here, we need to subtract our entry price from our stop loss price to get that distance in pips or points. Once we have that, we need to subtract our short stop loss distance multiplied by our risk reward profile from our entry price, in this case, the closing price. So what I could do now is I could copy these 2 lines of code and check if we have a valid short trade and then draw our short stops and targets. But I'm going to do something a little bit slightly more efficient here in terms of plots to reduce the amount of plots we need in our script. And for that, I'm going to save our stops and targets. So whenever we have a signal, we are going to save our stops and targets. For this, I'm using a VAR variable. So I need 2 VAR variables. They're both going to be float types. So I need to define these as float types. Normally you don't need to do this, but I'll show you why we need to do this in a moment, just to demonstrate how this is possible. I don't think we've covered this yet in the course. But by explicitly saying what data type this VAR variable is, I can now define tstop as NA. So it will be NA by default, but PineScript knows it's a float value. It's a decimal point number. And I can also create a T underscore target and set that to NA by default. So now we have T underscore stop and T underscore target. The T just stands for trade. So trade stop, trade target. And now I can check if we have a valid long setup or we have a valid short setup, then reassign T stop to, and then we need to check, do we have a valid long setup? If so, reference the long stop price. Otherwise, if we're inside this if statement and we don't have a valid long, that means we must have a valid short. So we can just say here short stop. And then same for our target. If we have a valid long or short trade, reassign our target to valid long, question mark, long target, whoops, otherwise short target. And that's it. Now what I can do is I can say with our plots, do we have a valid long or a valid short? Copy that down. And now I can plot my T stop and my T target. And now these two plots here will handle both our long stops and targets and our short stops and targets without needing to have 4 plots in our chart and therefore 4 plots up here on our indicator, which is not a problem with simple scripts, but the more complex a script gets, the more efficient you want to be with how many plots you have, because these can draw all the way across your chart and look a bit messy. Obviously, or maybe not obviously if you're not used to TradingView, but you can turn that off in the status line. You can turn off indicator arguments and indicator values. And now you have nothing plotting here. But if you need those values, if you need to reference those values in order to make sense of your script, then it's best to be efficient with your plots. And that's what we're doing here. So now watch what happens when I save my script. We'll be getting stops and targets drawing above and below short trades as well. And that's it. That is how you plot stops and targets above and below your entry pattern. So the source code to this particular version of the script will be below. But before we wrap up this lesson, I'm going to make a small tweak to this script to show you how we can draw our stops and targets across the chart until either one is hit. So let me show you how we do that. If I come up to our check filters code, underneath ready to trade, I'm going to create another VAR variable, and it's going to be an integer value, and it's going to be called in trade. And by default, it's going to be initialized as 0. 0 in this case is going to mean flat. This means we are not involved in a trade. When we detect a long trade, we'll set it to 1. And when we detect a short trade, we'll set it to -1. Then we can use this variable to tell our script what kind of trade we're involved in and what stops and targets to draw. So now if I scroll down here to our valid long or valid short trade, I can add another line of code here that says set in trade or reassign in trade to, and then we can say, do we have a valid long? If so, reassign it to 1. Otherwise, we must have a short trade, so reassign it to -1. And then next, we need to detect when our stops or targets are hit. To do that, I'll first check if our long stop or target is hit. We'll use an if statement here. We'll say if we are involved in a long trade. So if in trade is equal to 1, that means we are in a long trade. Then we want to check if the current bar's high is greater than or equal to our T underscore target. So for a long trade, if the high exceeds our target, that means we have hit our profit target. Or if the current bar's low is less than or equal to our T stop, our trade stop, that means that the current bar hit our stop loss and we should be out of our trade. So if either of these conditions are met, we're involved in a long trade and the stop or target is hit, then we reassign in trade to 0 or flat. If I copy this code here, paste it down here, change this to say short, change this to -1, and then I need to flip these values around. So if the current bar's high is greater than or equal to our stop loss in a short trade, or the current bar's low is less than or equal to our profit target, then we set in trade to 0 or flat. And now if I scroll down here, I can get rid of this check here, and we can say if in trade is not equal to 0, then that means we are involved in a trade and we want to draw our stop loss. If I get rid of this and say in trade not equal to 0, now we're drawing our target whenever we are involved in a trade. So now watch what happens when I save my code. We need to make one more adjustment here, but let's make sure this code compiles. There we go, it's working fine. Now one issue here is that you can see that we're detecting an entry setup, we're drawing our stops and targets across the chart, but then we get another setup that meets our rules, another candlestick pattern that we want to enter on. But the script is overriding our stops and targets with this new setups, stops and targets. If we do not want this behavior, and in most cases we don't, then what we need to do is tell the script, we need to add a filter to our script that says we can only have a valid long trade if all of our long conditions are met and we are not involved in a trade currently. So we need to make sure that in trade is equal to 0, and that we are flat. If I copy that down to our short trades as well. Now when I save my code, keep an eye on this section here of price action. When I click save, there we go. Now we are only drawing one setup at a time until either the stop loss or the target is hit by price action. And that's it. That is how you draw your stops and targets onto the chart. Those are two different ways we can do this. Now we'll cover this when we get to strategies, but just really quickly to wrap up this lesson, if you want to do the same thing with a strategy script, let me throw one on really quickly from, let me do some time traveling and throw on a script that we haven't actually written yet in the course, but we will soon, which is the RSI strategy. So let me hide our current script, open up the editor, create a new blank strategy, paste in the code from that lesson. I'll save this code and I'll add it to my chart. And this is designed for the Forex market. So if I jump over to a Forex market chart here and we just have a look at what's happening, you can see that the script is drawing our stops and our targets across price action until either one is hit, just like I showed you how to do. And actually, I just noticed that there was actually a mistake in this code. You can see that we're detecting another signal here, even though we're already involved in a signal. It's not drawing stops and targets or overriding our stops and targets, but it is drawing this little green arrow here. To get rid of that, I need to add on a check here. And strategy.position size is equal to 0. Copy that down there, save my code. This green arrow should go away. There we go, it's gone. Now, don't worry, we will cover strategy scripts in great detail later on in the course. But for now, since this is intended to be a standalone lesson to help you guys better understand different ways to draw your stops and targets onto the chart, I feel like I need to wrap this lesson up by showing you how to do what we just went through on an indicator script in a strategy script, so that later on, if you need to, you can come back and reference this lesson and see exactly how I do this without spending too much time digging through course material to find an example. So now, if I scroll down at the bottom of my script where I draw my stops and targets, you can see that I've got pretty much the same code here. The only difference is, instead of saying is in trade not equal to 0, we're simply saying is our strategy.position size not equal to 0. In a strategy script, if you have a long trade open, you will have a positive position size. If you have a short trade open, see if I can find one here. Here's one. We have a negative position size, a negative number. This is our position size, negative 43,000 contracts. If we have a position size that is not equal to 0, that means we're involved in a trade and we can draw our stops and targets onto the chart exactly the same way as we do in this script. Anyway, that will do it for this lesson. I will leave the source code to both versions of this script below, and I'll speak with you in the next lesson. Good luck with your trading and your coding. Take care.